A lot of time we've heard the fact that RSI is a good tool for predicting the market movement, but does it really work? And the simple answer to that is no. If you do not combine it with other studies, you will not get the best results. In this video, I'm going to tell you that how should you use practically the RSI in a way that have the best results out of your performance. So let's go into the trading view. I made the screen in white in order to be better seen. I go into this area, indicator and strategies. I find RSI, relative strength index, and I will tell you that how should we use it. The first case is that it is always the best. It is the thing that I am doing. If you use the practically go to the setting, select the value for the topper and bottom for 60/40, it would be more evident for you. Okay, what is it? What does it tell you? The thing is that it tells you that at the points that we enter to the areas which are above our 60 line, it is a good time for selling. And whenever we come to the areas that are below the 40 line, it is a good time for buying. So you consider the case whenever you enter this area, you are in the position that it is told to you that it is the best if you can practically buy your stock. But let's see, does it really work, or it's not the best point for entrance? Let's see, for example, this point. Here it says that you have to sell, yeah, because it passed the upper line. You come here, you sell at this point, but you see that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 tenths after the time that you sold. It is still going up. So it's not showing it precisely. Let's go and check another point, which is for buy. So in that area, which is for buy, let's check this area. Okay, you see here, it is mentioned that you have to buy here, but 1, 2, 3, 4, 5, 6, 7, 8 days. You have 8 days that the prices are much lower than the price that you've bought. So you have to be waiting for that period of time. So what is the best way in order for you to use the RSI and get a best result? Based on my experience, I'm not a fully experienced guy. I am learning with you guys. But the thing is that I'm watching a lot of different videos and I'm using a lot of different techniques. And one of the best, experiences that I had was the combination of, RSI with another indicator, and that is moving average, exponential moving average, or let me type EMA, moving average, exponential. You consider the moving average, you put the time for the period of the times that you are going to use. Okay, the symbol is clear, the scale is clear, appearance is clear. Okay, let me see. I come here, the EMA. Oh, sorry, it is here. Yeah, the inputs, you select the length 20, and let's go and see that what happens right now. A very important thing, I will talk about RSI's statistical meaning and EMA statistical meaning after this, but first I want you to learn that how should you use these two in combination together. Let's see here. Anytime, the formula is very simple. Anytime that the price is moving and passing this blue line from below, we believe that we are going to have a bullish market. And anytime that it passes the line, the blue line from top, we believe that the market will be a bearish market for that specific stock. So we are talking about SPCE in this case, SPY in this case. So let's go and take a look. For example, here, we got the signal from RSI that it is a good time for sell, but at the same time, in the same day, the price was passing the moving average line. So it shows us that we have to wait till what time? Till the time that, this line is above the These practically candles are above the blue line or above the EMA line, EMA 20 line. We see here, we wait up to here, okay? And you see, previously you were supposed to, sell at this price, but right now you are not at the peak. You cannot find the peak exactly. And I will later on tell you that, what are the other ways that you can improve this. But for now, but at least you are selling it here, and the price here is not comparable to here. Let's go check the other case that we had. The other case that we had was in this point. In this point, it was told to us traditionally that anytime that RSI is passing below this line, you have to sell. Let's see. If you sell here, it is not a good, practically solution. We told that anytime that it is passing, it means that you have to buy. Sorry, anytime that it is passing, it means that it will go down, 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 down till the time that it passes from below the line. So it is going to have an up trending price. So you can sell it at you can buy at this point. Yeah. So compare this point to this point. It's not comparable. So this is the way that you have to use the practically RSI with EMA. You need other kind of indicators like MACD. You can press the MACD. I use MACD strategy. It shows us very good that what is a good point for buy and sell. For example, you see here, it gives me the indication that it is a good point for buy. So I have two indications right now, RSI EMA plus my MACD. And these two combined together are showing me that what is a good point for entry and what is a good point for exit. So this is set to you, and let's go and dive. Okay, this video is this practical point of view. From practical point of view, this video is finished. I'm just going right to talk about the technical, analysis a little bit, RSI and EMA. And I want to tell you that what does it mean? Because if you want to learn it, you should know exactly that what is it. You cannot just use. We have a couple of thousands of different indicators, strategies, and it is not possible for you to practically remind everything unless you know it. So what is RSI? RSI, in fact, is an indicator that checks that in the last 14 days, in last 20 days, or whatsoever that you make the practically setting of that, what was the maximum amount of the profit that the stock made? What was the maximum amount of the loss that the stock made? And it checks if today we are passing the maximum profit or we are passing the maximum loss. So if we are passing the maximum profit, it says that, okay, based on my experience, based on the last 14 days, it's a good time for selling. But wait a moment, what if a good event happened? Or what if, a bad event happens? Let's consider a refinery, a company in oil and gas sector, which is a public company. Let's consider that, they have a lot of refineries and one of the refinery explodes. So we are dealing with a special day. We are not dealing with a day which is similar to the last 14 days. So in that special day, you have to always be aware that, the phenomenon would be somehow different. What is the way that we can use it? One of the ways is that you have to go for sentiment analysis. You have to always, take a look at the fundamental analysis. And other way is that you have to use, practically completing studies like RSI and EMA. Okay, let's go into the details a little bit more. What is the technical analysis? The technical analysis is practically the study of the human nature behaviors. So you say that in the past N years, whenever there was a good news, everybody was jumping to buy, the price goes up, the day after that, or at the end of the day, the price goes down, so I will sell it. Yeah? So we are using the behaviors of the people. And what is the fundamental analysis? In the fundamental analysis, we assume that everybody is rational, everybody is a super, great financial analyst, and everybody knows practically that what is the real rate of, trade of practically the stocks. So the fundamentals give you the price which are the real price. I mean, the prices which should have been the prices. So you will see, for example, SPC, everybody says, a Virgin Galactic company, everybody says that, okay, the price is much higher than it should have been because, they use the fundamental studies. Okay, so this is the difference. So in the fundamental case, we are